Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, October the 26th. The year's 2021. Let's talk trading. What not to do, part 2. This video is for educational purposes only. Your results may differ from mine. And just remember, we're talking about what not to do. One of the things not to do is forget or fail to use risk management. Never lose any more in one single trade than you are willing to lose. Now, remember, yesterday I mentioned that you have to tell your brain positive things. You have to tell it what to do as opposed to what not to do. So you have to tell your brain, I will use risk management on each and every trade, as opposed to saying, don't forget to do risk management. Okay, so let's take a look here. For the month, the pound is 295 pips over the open. We're in that upper monthly wick zone, as you can see. The week, we are now 28 pips above the weekly open. All the gaps have filled. Interesting day. We put in a weekly high today. You'll see. Actually, we put in a weekly high today because this is Tuesday, this is Monday. We broke out of yesterday's range here, but you can see we have a huge retrace, 62 pips off of the high. And obviously we're in the rat zone. We're only 3 pips above the daily open. There's a lot of interesting trading happening there. 126 pips above the open at the moment. You can see here, price hit the yearly midpoint and bounced. Yesterday was an inside bar. We broke out of it, so you inside bar traders were paid off. As you can see, we've got a lot of inside bar action today on the daily. The pound 73 pips, only 2 pairs over 100. So we had a lot of movement today, but we just haven't had the range. It's actually the pound is going coast to coast. So as you can see here, coast to coast. At least that's what Walmart and I like to call it. This huge bar here, I woke up about a half an hour too late. When I woke up, price was just right around here. And I didn't have all my wits about me. I didn't see that this was a huge return bar. I was, just kind of getting awake, and next thing I know, price had already dropped below 25, was hitting 20. I said, well, let's not chase after the trade, and you can see what happened since then. So I missed out on a really good trade this morning. So what not to do? Don't miss out on trades. So make sure you're ready to trade. But the thing is, we're humans, and sometimes we might be tired, sleepy, other things on our mind, and that can weigh in on you. But what happens is that goes back to having a trading plan. Because if you have a trading plan, you can just pretty much brute force follow your steps, your trading plan, and that way you can take advantage of opportunities that are on the chart. So here we can see the pivot point was basically on top of the open. So there was no pivot bias today at all. And we are right here in the lower rat zone. You can see we're in the smart rat zone. And you can see the upper rat zone here. Once again, had I been able to analyze this or have enough time, I would have said, hey, we're in the upper smart rat zone. We've already tried to make a new high, failed. So we had a holo trade here. We had a 1, 2, 3. There was a bunch of trade setups that presented the opportunity right there. And on the pivot, we saw that the price was, the pivot was too near the open to have a real bias. And we're right back to the weekly pivot, as you can see, 137.68. Took out the daily. We took out this week, but last week's pivot is still open, and we've taken out the monthly pivot. And what not to do is to ignore your system or try to override it. So what you have to do is, once again, tell yourself you are going to stick with your trading plan. You're going to follow the method. You're not going to try to outthink it. Because any one particular trade could be a winner or a loser, and you don't know that ahead of time. You really don't. So if your system says to do something, you just have to do it. We are in the yesterday's daily upper wick zone. You see we fell through it. We're now back in it. And this is a pretty nice return bar here. Maybe price will climb back up. We'll have to wait and see. On our higher low, lower high scalping chart, the 1 minute chart, you can see here we have a 3 ball set up for a scalp. It rejected, turning the candle green right there. So we'll have to wait and see what happens. We still have 20 minutes left this hour, so anything can happen. You see we broke out of the previous H1 low here. So if you were trading those breakouts, you have to take the trade. The wall mall trade, you can see it hit 70, didn't break it. If we come down to, let's just come down to M5, you can see here that was the first touch, and it was during the first minute or so. And usually we don't take those trades. So that would have been a skip. That's part of the plan. But you can see here that first touch of the previous low, don't take the first touch. You can just wait for the second. And usually it'll pay off. Sometimes you'll miss out on trades that way, but that's just trading. So what you have to do is, once again, follow your plan. And if you miss some, you miss some. And it's pretty much just that simple. As you can see, we're making a second touch at the previous H1 low here. Actually, this is the third touch because it touched it the last 5 minutes of the last hour. So we had a touch here, and then we had a touch just now. And I believe we're right by the pivot. And we're right by the daily open. So buyers and sellers are trying to decide which way we want to move this candle. Do we want to move the candle up and across the open? So we definitely have a buyer-seller struggle right now. And you can see here on the H1, here's the daily high, here's the daily close. So this was the upper wick zone. Looks like we're coming out of that upper wick zone once again. 6 pips off the low. We've only had 10 pips this hour. We've got 15, 16, 17 minutes left in the hour. It's right there. Average range for the last 100 hours is 16, and we're sitting at 10. And we have a 1 ball on the bottom. So we're wondering, is this going to break out to get closer to the average. If it does, it looks like it has to push down to the daily low. So right now, it looks like we've got a green rat trigger at 71. The red rat trigger, or last chance to get on the boat, was at 38.14, which was 52 pips ago. And here we're showing coast to coast from the lower ATR zone to the upper ATR zone. And for those of you wondering, I use the TRO ATR lines HL indicator that I wrote to plot these zones. And when I woke up this morning, I did not contemplate a coast to coast, but that sure would have been nice to make that trade. So hopefully one of you traders out there took advantage and got that trade. I know Walmal's busy. He didn't get it. He had to get up real early to trade, and so he didn't get a chance to do that. And last week we were talking about the highs and lows, and you can see here the this chart is just pretty much covered with the support resistance, the price action support resistance lines. But you can see here we've got 1, 2, 3, 4 lows that did not get broken at this level here. So, and the high that needs to be broken is at the 94. When this candle closes, unless it closes green, we'll have another high. So we'll be putting in another range that price will most likely break out of. So you can see here price broke out of this range, broke out of this range, took another hour to break out of this range. We had an inside bar here. So for you inside bar traders, there was a nice signal to go short, took that breakout. And so now here we broke out of this range, this low. So one of the other things that, I mentioned at first was the risk management. That's one of those things that will take you out of this. No money, no trade. So you really don't want to lose any more in any one particular trade than you're willing to lose. And, for some reason that's hard. It really is. It's because, winning trades, they say, you let your winners run, cut your losers early. But I'll stick in a losing trade for a while, believing that it's going to come back. And most of the times it usually does, but sometimes I might have to wait hours or days for that to happen. But for beginning traders, you just really have to make sure you don't get knocked out of the game, because most likely you're going to be starting with a small account, $1,000 or less. So it's real important that you have your risk management in place. It's just one of those things that can't be stressed enough. In fact, the things I'm going to be talking about this week are those things that really just can't be stressed enough. And you can look here on the fractal radar. You can see there's nothing up ahead to impede it. So if price decides to turn around, it should have clear sailing for a while. So, fellow traders, just remember, if you don't have your risk management in place, that could take you out of the game. So tell yourself before every trading session, and if necessary, before every trade, I will employ risk management, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.